Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about gold. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect for this market, then we will move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, the first thing that we have to notice is that we are in a huge uptrend. The market has been creating a series of monthly higher highs and higher lows, and all this uptrend with very strong bullish momentum is fueled by strong institutional buying, which again is something that I'll speak about in just a few moments when we move to the commitment of traders analysis. What we can also notice is that all this uptrend is coming after the break, retest, and rejection to the upside of a quite important historical structure level. This zone was acting as previous resistance preceding all these rejections to the downside. Then, as we were saying, the market broke above the level with this impulse. And when you have a strong historical structured zone, which was acting as resistance for many years, and the market then finally manages to break above the zone, what you would expect, so the natural behavior of the market in this case, is to retest that previous level of resistance, which is now turned support, and reject it to the upside aggressively. And that is in fact exactly what happened. We had the break, retest, and a massive rejection to the upside, triggering all the uptrend that I was speaking about just a moment ago, which is fueled by strong institutional buying. So let's keep in mind that everything on the monthly is bullish and drop down on the weekly time frame. Now here in the weekly, what we can notice is that again the market just behaved exactly as you would expect in a situation like this, because what we had here was in ascending triangle formation. Now when you see something like that, so the market creating equal highs at a specific level of resistance and at the same time higher lows, what you expect at some point is for the market to break out to the upside, because if sellers would have been in control of this market, they would create lower lows. Instead, since the market is creating higher lows, it means buyers remain in control of this market, and it's just a matter of time before the breakout to the upside occurs. And in fact, that is exactly what happened. We had the breakout to the upside with this huge impulse phase that the market has just created. Now, what we can notice is that obviously no market can just go up in a straight line. Every uptrend is composed by a series of impulses and corrections, which create the higher highs and higher lows of the uptrend itself. This is just basic market structure. And what we can notice here is that we just had the correction. So we had a huge impulse to the upside. Now the market has followed with a healthy correction. Now corrections give the possibility for more institutional buying, pushing the price potentially higher if the uptrend is to continue. What we can also notice is that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we have a 0.32 and 50% retracement levels lining up exactly inside of this zone. Now, this creates confluence of support inside of this zone, and when we have a confluence of support area, meaning that we have essentially multiple levels of support lining up in the same area of price, this increases even more the probability of seeing institutional buying in a specific level, and in this case it increases the probabilities of the market creating a higher low at this zone. Just a quick interruption, let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. We can notice that right now, the market seems to be creating a horizontal accumulation area inside of here. So when you see the market create multiple candles in the same area, usually it means you're seeing accumulation. Now, what do I mean by accumulation? Well, what we know is that institutions cannot really just press the button and buy all in the same moment. Big orders are spread out in time because there isn't enough liquidity in the market in a specific moment to fulfill those big orders. Because as we know, in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. That is why, and I have spoken about this in multiple occasions, the market usually follows accumulation and distribution patterns. So we see a strong uptrend, then we have some horizontal price action, then we see a push lower, then we see some horizontal price action before the next push higher. This is a distribution phase and this is an accumulation phase. So when you see horizontal price action, so essentially a range after a push lower at a potential higher load zone, as we have just identified on the weekly time frame, there is good probability that we are seeing institutional buying inside of this zone, and the market could create several patterns. For example, also a wedge formation if the market is to drop just a bit lower. But usually, again, what I mean is that in a situation like this, you expect to see institutional buying, potentially then reversing the price higher. Speaking about institutional buying, if we move to the commitment of traders analysis and we look at the data for gold, the first thing that we have to keep in mind is that by looking at the data for gold, we're actually already looking at gold against the USD, because all currencies on the spot are traded against the USD and also all commodities. So in a situation like this, we're already looking at gold USD. And what we can see here is that net positions with the last reports have been massively increased. But since the US government is currently in a shutdown, we are missing the very last few reports. The government shutdown is already the biggest one that we have had in history. So I expect it to be ending quite soon and the data to continue to be released as usual. Now, in a situation like this, what we can try to understand is what was the trend before we stopped getting the data. Because as we have already discussed also, institutions take a lot of time to shift their positioning because they have such large orders and there isn't enough liquidity in a specific moment to just make the switch altogether. And what we can see is that if we look at the trend, it is very clear that net positions were getting increased. We went from 161.2K all the way up to 266.7K net positions. So essentially, we had a huge increase of the net positions with institutions moving back to the bullish side for gold. We can see that longs went from 234K all the way up to 332K. Shorts here, we can see that pretty much declined slightly, but compared to the amount of increase of longs is quite negligible. We went from 89K shorts down to 66K shorts. So obviously we did have also a decrease of shorts, but the increase of longs was massive. That contributed the most to the increase of these net positions. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, we have the possibility of a higher low being created at this zone. And we have already spoken about a potential accumulation area happening right here on the daily time frame. So as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. So if the market would shift inside of this accumulation zone from an intraday bearish to an intraday bullish market, at that point, I wouldn't be surprised to see a potential rejection higher away from this level for the market to create a higher low at this zone on the weekly time frame. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.